No matter where you look, inflation is off the charts. You can see it at the grocery store or in your favorite asset. You have watched prices rising nonstop. And the question that I'm going to bring up first here is, why is this the case? What's happening right now? Well, of course, inflation has been a topic on everybody's mind today, and I'm going to show you something that I believe we all need to know and then pass around, because there are some people who are oblivious to this. The second thing I want to look at is what assets are poised to do very well during these inflationary periods when most people are unable to get by. Some are doing very well. What are they buying? I'm going to cover all of that and more. Let's begin. Inflation is everywhere today, and what is happening right now? The governments, the central banks, they are pumping in money into the system like we have never seen in history. Over a long period of time, no currency has been able to withstand the shock of a devaluation. And so, Charlie Munger, right here, Warren Buffett's right-hand man, he had this to say. Munger clearly sees inflation not going anywhere in the decades ahead, and he offered this discouragement to anyone looking to parking their money in the currency for the long term. Quote, I think it's a safe assumption for an investor that over the next 100 years, the currency is going to zero. That is my working hypothesis. Now, you just see the history behind that. You didn't have to hear it from Munger, but I do believe that we should all be paying attention. The currency is devaluing, and we are watching one asset or the other, seeing the nominal price increase. But it doesn't happen linearly. It's not as if they print $1 trillion and then this happens. You can't really quantify it in this way. So let's break it down. Let's look at different assets. Let's look at what people are doing. First things first, we have the retail investor. They are putting their money into the stock market. This shows us from the EPFR that retail investors are pumping basically a record amount of cash into the markets today. Now, we have watched the markets themselves. As you can see right here, this happens to be the Dow Jones, not performing very well, let me tell you. The market had one of its worst days recently. This is approximately at the same level it was at in April of 2021. Not good, to say the least. Now, some stocks are doing very well, but not the indexes as a whole. They are well off from their highs. On the other end of the spectrum, we see gold. Now, at the time you're watching this video, the price may be off a little bit, but essentially we are near an all-time high. It is very important that we see what has happened here and now. Looking at the price of gold, it gives you some insight as to what's happening with fiat currency. Because when you have a concern over what's going to happen in the future for this particular currency, some investors buy gold. And of course, some consider it to be a barbarous relic. But you can look at this over time when there's geopolitical tensions, when there's inflationary problems, the gold price can go higher. And right now, it is near its all-time high. Quite steady over this last while, where it had been kind of trading within 1800 for a while. It has been breaking out of that channel. China's consumers spent $73 billion on luxury goods at home last year, up 36% from 2020. So it's not just China, but what I want to talk about here is the luxury markets. Maybe it's, purses and bags and shoes and all these things. That's one aspect. But let's look at it on a different level. You see the luxury vehicles like Rolls-Royce and Bentley. They physically cannot keep up. Ferrari makes the car before they actually produce the cars. They've already sold them. Bugatti, all these different companies. The cars might be well over, like multi-million-dollar cars. They have not even, the person hasn't even seen these cars yet. It's just a drawing on a computer, and they say, yes, I'll take one. I mean, that's the world we're living in today. So it shows you that certain groups of people have money. What is one of the asset classes that has statistically performed very well. It's art. Renaissance drawing, bought for $30 at a yard sale, discovered to be worth at least $10 million. Now, you don't get this often, and that's the one problem with art. It's that how do you know what's going to become the next big thing? Are you going to find Mona Lisa at a garage sale? It doesn't often happen. That is one problem. Okay? Botticelli sold for $45 million at a Sotheby's auction. Back in 1963, this was $26,000. Still a good sum during that period, but now $45 million. It's hard to pick and choose. At the same time, you can't go and buy a $45 million painting. So that's kind of one of the reasons why I haven't necessarily been talking much about art. But something has changed recently, and I wanted to bring this to you. So let's talk about that. I want to talk briefly about Masterworks. This is a company who is doing things very differently. They are about to become one of the biggest buyers of art, potentially as early as this year. I've been to the Uffizi in Florence and to the Picasso exhibit in Barcelona, and what I can tell you is that the only thing preventing more people from investing in this asset class is, quite frankly, the price. Despite the excellent returns of the stock market over the last few years, contemporary art pieces outpace the S&P 500 total return by 164% from 1995 to 2021. Just to give you a little bit of insight as to how unbelievable this has been. Now, why? It's because the money is clearly there behind art, behind collectibles. And we watch that throughout this period and see how much of a difference it has been to some other assets. Here you can see one example in 2020. Masterworks sold street art prankster Banksy's take on the Mona Lisa for $1.5 million. The sale delivered returns of more than 30% to investors. So just to give you a little bit of what this is all about, of Masterworks, to see this particular company doing something very different than what we had seen, allowing investors to get into a market which, quite frankly, was impossible before. So I have a link down in the description which will get you hooked up with Masterworks. Take a look at it, and I think this could be something that would be an interest to you. Now we could go a step deeper on art. Deutsche Bank's John Arena. Art lending is a simple proposition. It goes, think about people borrowing against their stocks. You can do that. You could borrow against your real estate. You can do a cash out refinance, right? But borrowing against art. And apparently this was something that, a lot of people who love art and these very ultra high net worth clients, they've got millions and millions and millions of dollars worth of art. And now they're finding they could borrow against that. So essentially like a line of credit, and they take the cash out and they can go spend it somewhere. Very, very low interest rates. It's just a completely different look at something like a painting that's on somebody's wall. Here you have the global ultra high net worth wealth associated with art and collectibles. A lot of that is in North America, no doubt about it. So I just want to show you that as well. Here you have Larry Fink from BlackRock. Everybody knows Larry Fink. The two greatest stores of wealth internationally today is contemporary art. And I don't mean that as a joke. I mean that as a serious asset class. He's talking about real estate as well. Contemporary art, very interesting to say the least. So let's look for a second at some other examples. Where is the money going? Well, real estate, as Larry Fink mentioned, is obviously one where a lot of money has been flowing into. But there's one particular aspect of real estate that works differently, and that is the multifamily real estate. So pictured right here, You're seeing, these properties that go for, mega millions. You see, it might have 300 units, it might have 500 units. And of course, these type of properties are purchased by companies like Blackstone. Blackstone to buy preferred apartment communities in a $5.8 billion deal. This is just showing you the investor demand in multifamily properties in the Sunbelt states. You have investors like Grant Cardone doing that with his funds. And you see this time and time again, money going into the multifamily space. And remember, the multifamily space prices differently than single family homes would. It's a very, very different market, okay? Just be aware of that. Then we have farmland. With inflation rates rising, investors are increasingly turning to farmland because it's low correlation to stocks and it can generate a steady return over time. In June, the average value of farmland reached $3,300 per acre, a 7% increase from a year earlier. So it's not going to see these huge spikes up, huge spikes down, but certainly the value is there. Real land, real assets. That's what's different about this. Whether it is the farmland, whether it is gold, whether it is art, we need real, tangible stuff. And then there's this. It's the business side, but I want to make people aware of this, something that I am aware personally of. The new economy of Amazon aggregators is so hot that major players, including Thrasio and SellerX, have turned to a matchmaking service to acquire new sellers. So what's happening here? These companies like Thrasio and SellerX have become billion-dollar companies like Masterworks. And what they do is they seek out different products on Amazon and they say, wait a minute, we could buy that product, take it into our own portfolio and get the residual income from it. So what's happening here is these are businesses, online businesses, e-commerce businesses that are bringing in money every single month, every single year. And then on top of that, you've got these aggregators buying them up. So there's number one opportunity for somebody to sell online, build up that business, sell it off. They'll give you, maybe let's say 3 times the revenue. So if you're making $100,000 a year, they'll give you $300,000. Here's your cash. And what do they get? They get a recurring revenue stream. They borrow the money very cheaply. In the case of SellerX, they're getting money from LVMH, one of the biggest companies in the world, one of their subsidiaries. And they're also getting money from BlackRock and other companies too. They borrow very cheaply and they buy this up. So there's the business aspect of this as well. So we've got businesses, those are tangible. We've got art, we've got the gold and other precious metals. We've got real estate and of course land. All of this is where the money is going to. Whenever you see that there is turbulence, that there is concern, money really starts to find its way into safer places. So I hope I've made that clear. I hope this was informative to you. This is a little bit of a different episode. If you appreciate the information, hit that thumbs up button.